Hey traders, welcome to another episode of Charts and Coffee. Happy Wednesday, everybody. We're going to take a quick look at the economic calendar to kick off our session here, because some of you might have already noticed that we're seeing a little bit of volatility, bullish volatility this morning. So let's remember, regardless of what asset class you trade, and regardless of whether or not you're a day trader or an end of day trader, regardless of the time frame or even the time horizon, it's good to know when the events are happening. Now, you might say, hey, Rag, well, if I'm playing longer term, I'm looking at a daily time frame or a weekly trend, does it really matter? Does it really matter that we have, data coming out today by way of the 8:30 a.m. Eastern CPI and core CPI? Does it really matter? And my answer to that is yes. My answer to that is yes, because if you can take advantage of these volatility moves, even if you're playing longer term, I have these numbers, whether it's a 1-minute chart or whether it's a daily time frame or even a weekly for my portfolios. I call them wish list numbers. In other words, if I were just on a crazy dream wanting to see a significant pullback in a market, maybe it's, let's use an example only because it's so discussed, Tesla. So let's say we look at what a 20% pullback in Tesla would be. And someone thinks, oh gosh, $180 pullback? Nah. And yet, so my point is, a lot of times you can put some of these wish list numbers on a 1-minute time frame. If we were to come back down and hit a clearing range low, you can put them on a daily time frame. Let's say we're to come back down and hit a 200 EMA. That's a significant low. And those are levels that I'm not necessarily expecting to happen instantly or even ever. But I like to place an alert, or I like to place a limit order to buy, depending on the situation. And part of finding when we might make those moves or when those catalysts might be is the economic calendar. Most definitely data that is related to GDP, inflation, central bank events, speeches, of course, policy events. And those are, of course, your pillars of macroeconomics. All right. So why is the economic calendar important, regardless of the time frame? Look, if you're trading a 1-minute chart and you're going into the 8:30 a.m. Eastern CPI number, knowing it's a macro pillar, knowing it's something that the Fed is talking about, watching the markets discussing inflation, it could be potentially a market mover. You want to manage risk. And, I think even more than that, you want to get opportunistic. You want to think about whether or not the number came in as expected, in line. Was it a miss? Was it a beat? One of the things that I'll be doing today is watching the crude oil inventories number. I watch it every Wednesday that it's released, and I'll be looking for a potential pullback that I can buy into, or even a day trading setup. So use the calendar to your advantage. You don't want to get sideswiped. You don't want to get blindsided by calendar events. And don't assume that, the number is going to be good or bad. Just use it as a volatility event, right? I would say the same thing about earnings. Use it as a volatility event if you're going to use it at all. I think for most traders, they're going to be better off just sort of navigating around it rather than through it. All right. So with that being said, quick look at the economic calendar. And my preferred economic calendar is the one at Forex Factory when it comes to just general data. I would also say make a pit stop at Trading Economics. What they do really well, not to mention a global calendar, which is important to me because I play ETFs that track the equity markets of other countries, of course, currencies. But one thing that sometimes you'll find on tradingeconomics.com that you may not find at Forex Factory, here we go, is when a central bank event speaker, sometimes the more minor speaking events won't be listed on Forex Factory, and they will be listed on Trading Economics. And of course, when we go into earnings season, I have a different calendar again for that. I use Estimize. So, keep a number of calendars that are tracking different volatility events available to you, and something you check on a regular basis. All right, happy Wednesday to everybody. All right, so let's go ahead and tackle some questions here. And James, how you doing, my friend? Good morning. I was reviewing some of my work last night and have this question. Okay, in regards to oversold buys. All right, so we're talking choppy markets. If a double green market turns red yellow, meaning we transition out of the trend, gotcha. But I have an RAF buy signal. Is the trade good? James, we're going to be doing our special session in the Sector Secrets room here in about 24 minutes. So if you want to bring up this, I can't. So I guess the answer is I can't say yes or no. I've got to look at the chart. We've got to look at the range that might have been put in terms of that time frame, that daily time frame, and what the trend was, how wide is the range, how long have we been chopping. So if there's a particular symbol that you have in mind, I'm sure it would benefit everybody here at Charts and Coffee. But let me know. But as a general rule, I really can't say yes or no, right? Probably yes, but I do not know. It's got to be a little bit more specific to a particular, is it near a number of other levels that might make that more pertinent a buy? Okay. But thanks for the question. I like where your head's at. But yeah, if you have a symbol in mind, let me know. All right. Next up is the XLE. All right. XLE. Taking a look here, monster uptrend, parabolic uptrend, trading above multiple key volume weighted average price levels, trading above some key support that was sitting at about 49.80 and change. And do I want to pull back? Gosh, yes, absolutely. We were hoping, that's all we can do sometimes, is hope when we have different economic events, kind of going back to the calendar. The central bank of crude oil is OPEC. So we were looking for a central bank policy change. We were looking for, just like the central bank prints money, well, OPEC sort of prints crude in terms of controlling the supply of it, the supply, the availability, the output. They can't control demand, but they can control output. They can control supply. And so with that being said, we did not get that pullback. We did not get perhaps an increase in output, which would have sent crude down a little bit, would have given us an opportunity in a number of oil stocks, not just the XLE energy SPDR, but also XOP. I love this XOP narrative at these highs in crude in terms of the interest in oil exploration. So pullbacks here, absolutely. Pullbacks also in oil services. Absolutely. One of the trades that we're setting up, both as an underlying stock, because there are times I will trade the underlying stock. In fact, I get this question quite a bit. Since we're on the topic of XLE and crude, Chaya, thanks for the question. There are certain stocks that are usually a sub 15, sub 20 bucks that I'll also mention, look, you could buy the underlying stock as well as buy the option on it. And sometimes the underlying is affordable enough. I've been buying rig. I've been buying things like Ford as well as the options. So here's a really good explainer on that. If I don't want to own the underlying, meaning the underlying market of the derivative, the futures contract to the futures option, or the stock to the stock option, or the ETF to the ETF option, if I'm not interested in that underlying, why the heck am I trading the option? Now, this is not pertinent for options sellers. This is not going to affect traders who are collecting premium, taking advantage of, say, iron condors and sideways markets, which is about the only thing that I'll do in options with a sideways market other than wait for oversold buys or overbought shorts. But there are opportunities to buy the underlying, and RIG is probably a really good example. And related to XLE, I'd keep an eye on this one. It's been really good. It looks ridiculous, right? 2 now to 4, but if you're buying the underlying stock, and I've been doing so just above $2, it's already doubled. And I think as long as we see the uptrend, so this is a neat way to engage a low-cost stock related to that narrative. this reflation narrative and the uptrend. All right, Mal says, good morning. Oh, right, game stock. Love those meme stocks. Meme stocks and short squeezes are very much a side effect of, or reflation triggers that, right? Kind of a side effect. And yeah, I love what's happening over at Reddit and the retail army, no doubt. And GameStop, what it says underneath that is power to the people. Thanks, Mel. All right, let's see here. Hey there, Jimmy. RH, an apple a day keeps the doctor away, not corn. So yesterday, yeah, I had the corn, not apple trade. And look, corn's been kicking apple's butt. I don't mind either. I kind of said, look, I was sort of picking on Apple because it just made for a really good explainer. But really, let's think about reflation right now and the way in which tech has been Donkey Konged, and we're seeing the flows, I believe, focus on XLC, not XLK, which is where Apple and Microsoft are heavily weighted. XLC is Facebook and Google. We're watching QQQ, where the NASDAQ futures continue to struggle. And we are noticing that the reflation trade continues to help our good old-fashioned grocery store commodities. And also our more, not our, I hate calling them flight to safety metals because I don't believe that's it, but copper, right? We've talked about copper. We've talked about Freeport-McMoRan. I've even talked about platinum. Silver, I had a technical bounce set up on silver. We sent out in the free video just the other day. But, in terms of that copper, yeah, I was having some fun, but I was quite sincere. I mean it. I think that I'm going to see commodities really outperform a number of the sectors in the equity markets. And then that was really the point of that. So I love it, Jimmy. And thanks for the comment. All right. How do I keep myself from setting my chart on 1 minute and then going all in with 100? I would say what I really like is a mouse. Here, let me see if I can pull them out. You can't see the mouse. That is part mouse, part cattle prod. I would recommend that. I would recommend the minute you try to do that, your mouse sends you a swift electric shock, my friend. Yeah. All right. Next up, thoughts on ENPH. Yeah, I don't like the structure, right? When we take a look at what's happening on ENPH and we look at the fact that it's broken the double green, it has broken the 55 EMA and the wave, and it's got quite a few red grab candles. One thing it does have is the proximity to the 200 exponential, and we are not double red. So if you're thinking, could we get a bounce off that 200 EMA? I'd like to find some volume closer to that level. It seems to be sitting up around 150 to 144. But the 200 exponential is a very good technical level for a potential bounce. And in a yellow underlying trend market, yellow meaning 813, 21, 34 are not indicating an up nor a down trend. What I'd say is I like to keep an eye on an MACD. Let's see if the MACD can go positive. But yeah, it's buyable. But I guess I'll always come back to whether or not I've exhausted all the potential buys that are trending before I start going into choppy market buys. Nothing wrong with choppy market buys, but I'd rather stick with the high probability or the higher probability of trend following. However, you get an oversold chop confirming, say, 200 EMA support, maybe a VWAP, that might be something to look at, different volume levels. You could be onto something really good there. All right, thoughts on Beam and FSLY. Beam's kind of the same story, but fast forward on Beam, Paul, take a look at what's happening to the right here. Beam's double red. So even though it's at the 200 EMA, Beam's double red. So the difference between Beam and the difference between, say, ENPH is still yellow in the trend. Beam has gone double red in the trend, downtrend. So I'd say no on Beam. Now, if you say, well, Rog, Okay, I got it, but I think we could bounce. You got a gorgeous level here between a point of control and the 200 EMA. Problem is, in a downtrend, your issue is not going to be whether or not we might get a technical bounce. The issue is going to be where to put the stop. And I think that's something that we talk about a lot in Sector Secrets, whenever we deal with choppy markets or markets that have broken a double green. And it's not that they're not buyable. It's not that we cannot find levels to buy from. What becomes problematic is the risk management. The fact that once a market loses double green or goes double red and you're thinking about a buy, where the heck do you put your stop? You're going to find it becomes much more difficult to do so. So it's not that they're not buyable, but the other part of the trade, the entry part, okay, you got it. But the risk management part becomes far, far trickier. So thanks for the question on Beam. FSLY, same story. And actually worse because we've broken the 200. All right, so no for me on both those. But then again, it's not that they're no's for everybody. You just might have to find a different style, a different process for dealing with markets that are moving lower that you may want to buy. Or maybe you want to short them. I'm not quite sure. But I'd be more apt to sell the rip in a double red than buy the dip because it's not a dip anymore. Dips apply to trends, and these aren't trending higher. All right. So next up, Nikolai. Once we're through this pit bull low week, coming up is your bias to the upside. My bias is still to the upside. I just want to get opportunistic on potential movement to the downside, but my bias has not shifted. Even through all the craziness at the end of January, even through all the craziness through the end of February, who the heck knows what March is going to bring? But I have not shifted my bullishness since November 3. So my directional bias is still very much bullish. Looking at potential corrections or lows or retracements that I want to buy doesn't change my directional bias. I'm just being opportunistic, directionally opportunistic. I've picked a side and I will continue to look for the upside. So those of you that have been following me in the futures room or in the Sector Secrets Mastery room, you know that I'm still very, 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 very bullish. And what do we got going on today here? We have some medium roast Death Wish in the, it's one of my newer mugs. Love this mug, my Snoopy mug. So yeah, I would say just because I'm looking at a pullback doesn't mean that shifts my directional bias. The directional bias simply means which way would I prefer to trade the market? Or for me, even more strictly, which way am I allowed to trade the market? And it's been long and long only, ever since. Okay. Next up is thoughts on XLB. I like XLB, maybe not structurally yet, Sean. The trend quite isn't there yet. I don't want to short this, right? Look at the trend that was double green, double green, double green, went to yellow. I still want to keep that directional bias that's bullish. However, one thing I will say is that as much as I love this sector, generally speaking, in the current reflationary macro environment, it's not quite there. It's not giving me the structure that I want. It's not behaving in a way that I want yet. So what I'll say is, let's jump on over to ETFDB, and I will get more granular in terms of, are there specific holdings that make sense? I know CTVA was a name that was on my list. Dow was a name that was on my list. Freeport McMoran, we've been trading the heck out of. So when you have a narrative you like, but that broader sector hasn't really caught up in terms of narrative to trend, you want both, ideally. And trend is more important than even narrative. But maybe as this market's trying to move higher, as we know it is, are there names that are outperforming right now? And there are, right? You see that? The three that I mentioned, the relative outperformers. So I love the general idea of XLB, Sean, but XLB as a whole is not a tide that's rising. But the individual boats, there's some individual boats that are, and I would definitely keep an eye on that. All right? Very, very important. in terms of following your relative outperformers. That's really how I do it. I find a sector or an index that I like. If it does not have the type of structure that I need, I'll move on. I'll take a look at what's inside of it and see if there are some relative outperformers that are sort of a little early to the party, and I'll play those. And so that's a really good example there. And I thank you for that question, Sean. All right, gang, and just like that, it's time to wrap up our Charts and Coffee show. Thanks as always for joining me. We'll be back again tomorrow at 9 a.m. taking a look at these markets. And, yes, I'm still very bullish, gang. Moves to the downside will continue to be opportunities. If there are moves to the downside, we'll be talking about this in the session that I'll be starting in just a few moments in the Sector Secrets room. If you want to check it out, by the way, gang, when you're ready to start, you want to join me in terms of some of this trading that I do in the stock and ETF market, sometimes buying the underlying, sometimes just going with the option. You can join me over at simplertrading.com/sector. All right, gang. Thanks as always. I'll see you tomorrow, 9 a.m., same time, same station. Be good to each other. Until then.